Hi guys, welcome back to the YouTube channel. In today's video, I'm going to be talking about how you can pay yourself from the UK. So a lot of people, especially when you move into Dubai, you've still got a UK business, how you can pay yourself whilst you're living overseas, somewhere such as Dubai, Portugal, Malta, you know the list. How can you take money from your UK business overseas? Well, in this video, I'm going to tell you exactly how you can do it. So you've got a UK business that's still in the UK, you want to keep it there, but how can you remunerate yourself whilst you're living overseas? How can you pay for your living expenses? So there are a number of ways you can do this. The first one is probably the easiest way, and that is basically as a payroll, as an employee of the company, continue to pay yourself a monthly salary. So where you become non-resident, non-UK tax resident, you can basically tell HMRC that you become a non-tax resident and you ask for an NT tax code. You can write to HMRC and get this, and that will basically allow your salary to be paid to you on a gross basis. So they won't deduct any tax. And as long as you do all of your employment activities overseas, you don't do any work in the UK at all, you shouldn't have any UK tax implications here. So you can pay a salary. It's got to be a market value salary. It can't be excessive. It's got to be in line with the market. If prior to departure you were taking a 12,570, but now you ramp it up and you take £500,000 salary to completely clear out your company profits, HMRC are rightly so going to have an issue with this. But if your company is doing £500,000 a year, it's got to have some pretty decent scale to it. So a market value salary could quite easily be £100,000, £200,000, depending on the value that you provide to the business and what it would cost for that same company to hire somebody else to do your job. So it's got to be market value, but then that can be paid, and that's tax deductible in the UK, which is what's fantastic about this, because obviously you can take dividends from your company, but paying a salary is tax deductible. So that could be saving tax at 25% in the UK. And if you receive that, if you're a tax resident in Dubai, for instance, where there's 0% income tax, you save tax in the UK and you receive that fully tax-free. So it's a win-win on both points there. Depending on which country you're in, it might be tax-free. I know a lot of countries, they do basically give an exemption to overseas income. So as long as the money is coming from UK, you shouldn't pay any tax on that. But definitely do check with the specific country that you're living in, because the last thing you want to do would be to look to save tax in the UK, but then actually end up paying more tax because you're living and you're tax resident in the wrong country. An additional point, depending on the country that you relocate to, the chances are you will have to continue paying national insurance as well for 12 months, as is the case when you relocate to Dubai. So as it's a UK employment, 12 months of national insurance, but then after that, you don't need to pay anything else. The second way to look at extracting money from your UK company is to basically have, if you've got an overseas company set up, such as a free zone company here in Dubai, we'll actually invoice your UK business from your Dubai business. So actually all of the services and work that you perform that actually generate money in the UK, you can look to basically quantify this just as you would with a salary. Okay, so if we were to have an external consultancy company come in or pay a freelancer to do the work that I'm doing, what would they charge? And basically we work this out. We've got tons of information on how to work this out through the Tax Smart program, all the details, so you can help work this out yourself and us together. But basically coming up with that amount, and then you can invoice that to your UK company, which is again tax deductible. That would come to Dubai, where for the most part it's tax-free in your business, and then your business here in Dubai can pay that out to you tax-free as well. So that's the second way of doing it. Very, very similar in terms of the actual mechanisms. You've got to make sure it's all at arm's length. It's not excessive. You've got to be reasonable at the end of the day. You can't just inflate the figures to reduce your taxes, because HMRC won't like this at all. So keep it all reasonable, but the end result is you can move overseas and save a lot of tax. So those are the two best ways of getting money out of your UK businesses, and the last way really is through dividends. So with a dividend, unfortunately, you're not going to have that corporation tax saving that you would with an invoice or a salary, but dividends are still tax-free, and the good thing about those is they're unlimited. If your business is doing £500,000 a year, okay, fantastic, we'll put a salary through of say 100,000 or 200,000, then that remaining 800,000 can actually be taken out as a dividend. After you've paid your UK corporation tax on the 800,000, of course, but that can be taken out as a dividend, and that will be tax-free as well, depending on the country. If it's Dubai, fully tax-free. So that will give you basically about £600,000 worth of dividends in your own pocket, completely tax-free, which you could then spend or invest as you wish. So they're the three main ways, including the dividends, little bonus one there, of how to get money out of your UK company when living overseas. If you want to find out more about this, book your call. Click that link below where we're going to run through the Tax Smart Wealth program, exactly what we cover, how it can help you relocate overseas and save hundreds of thousands in tax, as you've seen in this video. That's all for today, guys. Please do give it a thumbs up and smack that subscribe button.